$38 trillion. If you believe that number doesn't affect your life, your savings, or your future, you've been dangerously misled. September 2024. A classified meeting happened in Basel, Switzerland. Central bankers from 63 countries. No media coverage, no official transcript. But 3 weeks later, something changed in the treasury markets. Foreign holdings of U.S. debt dropped $89 billion in a single month. The largest one-month decline outside a financial crisis. Ever. And if you think that's just a coincidence, just random market movement, you need to understand something right now. This exact sequence, this exact pattern of events has played out 3 times in the last 500 years. Different countries, different centuries. Same mathematics, same outcome. And every single time, the people holding the currency when it collapsed, the ones who didn't see it coming, lost everything. Not some of their wealth. Everything. Within 36 months. What I'm about to show you isn't theory, it's documented historical fact. A 4-stage cycle that's destroyed every reserve currency that's ever existed. And right now, today, America is deep into stage 3. The question isn't whether it's happening. The data proves it is. The question is whether you understand what comes next and whether you're prepared for it. By the end of this video, you'll see the pattern so clearly you won't be able to unsee it. You'll understand why China's selling, why gold's behaving differently than any time since 1971, why the world's largest asset managers are restructuring in ways they haven't done in generations. Because there's a mathematical breaking point, and we're approaching it faster than most people realize. Let me show you how reserve currencies die. Every reserve currency in modern history has followed an identical 4-stage pattern. Not similar. Identical. The same progression, the same warning signs, the same timeline, the same catastrophic ending. Understanding this pattern is the difference between seeing what's coming and being blindsided by it. Stage 1, the ascension. A nation rises to economic dominance through some combination of military victory, technological superiority, or geographic advantage. Capital floods in from across the world. Their currency becomes the standard for international trade. Foreign governments hold it as reserves. Banks settle in it. Merchants invoice in it. The country becomes the center of global finance. Money-seeking returns finds its way there. Markets deepen. Innovation accelerates. Wealth compounds. This phase typically lasts 50 to 80 years, long enough that everyone forgets it could ever end. Stage 2, the overextension. Success breeds institutional arrogance. The government begins spending far beyond its productive capacity. Military commitments expand across continents. Social programs multiply. Bureaucracies metastasize. All of it funded not with current production, but with debt, with promises, with money borrowed against future generations who have no say in the matter. Debt grows faster than the economy beneath it. But asset prices keep rising. Real estate booms. Stock markets hit records. Everyone feels wealthy on paper. Central banks accommodate by expanding money supply, by lowering interest rates, by making credit abundant. And the longer it works, the more convinced everyone becomes it will work forever. This phase lasts 20 to 40 years. Stage 3, the silent exodus. This is the critical phase. The turning point. The smart money, the institutional money, the old money that survived multiple cycles, sees what's coming. They don't announce it. They don't publish op-eds explaining their reasoning. They just move, quietly, systematically. Calculated capital rotation out of what's breaking into what's stable. Foreign central banks reduce reserve holdings. Sovereign wealth funds diversify away. Major corporations shift investment priorities. Wealthy families transfer assets across borders. The exodus starts slowly, then accelerates. This phase lasts 18 to 36 months. Fast enough that most people miss it entirely. Slow enough that it seems like normal market activity until you zoom out and see the aggregate flow. Stage 4, the collapse. The currency loses reserve status, not through formal decree, through market rejection. Foreign holders dump their positions. Inflation ignites. Interest rates spike to levels that make the debt unsustainable. Asset prices collapse simultaneously across all classes. Banks fail in cascades. Pension funds become insolvent. Insurance companies default. The middle class, holding most wealth in domestic currency and domestic assets, gets obliterated. Savings evaporate. Retirement accounts vanish. Real purchasing power disappears. Political chaos follows economic chaos. And everyone asks the same question they always ask. How did this happen? Why didn't anyone warn us? The answer? The warnings were everywhere. You just weren't listening. Now let me prove this pattern with historical data. 3 empires, 3 reserve currencies, 3 identical cycles. 16th century Spain. The Spanish Empire at its zenith controlled more territory than any power in European history. Spanish galleons returned from the Americas, loaded with gold and silver in quantities that redefined what wealth meant. The Spanish real became the global reserve currency. If you wanted to engage in international trade, you needed reals. Madrid was the financial center of the known world. Stage 1 complete. King Philip II ruled half of Europe and territories on 3 continents. Spanish military dominance was absolute. The wealth seemed infinite. And what did the government do with infinite wealth? It spent infinitely. Wars with France, wars with England, wars with the Ottomans, wars with Dutch rebels, a military presence spanning the globe, a royal court that consumed fortunes, palaces that cost kingdoms, and the Inquisition burning money while burning heretics. By 1550, government spending ran at 300% of tax revenue, 3 times what they collected. The difference came from loans, Italian banks, German merchants, anyone who would lend, but gold kept flowing from the New World, so nobody worried. Asset prices in Spain kept climbing. Everyone felt rich. Stage 2. Then quietly, in 1555, something shifted. Major Spanish banking families began moving assets to Genoa. The Fugger family, Spain's largest creditor, started demanding repayment in physical gold instead of promissory notes. They wanted out. By 1556, wealthy merchants were transferring operations to Amsterdam, not all at once, gradually, opening offices, moving inventory, redirecting supply chains. Why? Because people who read financial statements could see Spain was functionally insolvent. The government was paying 40% interest on some loans. 40%. That's not a sign of strength. That's desperation bleeding through official records. Stage 3. 1557, Spain defaulted. The first time. Credit markets froze. Bonds became worthless overnight. The government seized private gold to pay soldiers. But the king promised it was temporary. An anomaly. Everything would stabilize. 1560, Spain defaulted again. 1575, again. 1596, again. 1597, again. 4 defaults in 40 years. The currency collapsed. Inflation destroyed the middle class. Spanish power evaporated like it had never existed. By 1600, Spain was irrelevant. The Golden Age ended. It never came back. Stage 4. Where did the money go? North to the Dutch Republic, 17th century Amsterdam, the richest city in human history relative to its size. The Dutch East India Company at peak valuation was worth $8.28 trillion in modern terms, larger than Apple, Microsoft, Amazon, Google, and Tesla combined. Dutch banks financed global trade. The Amsterdam Stock Exchange was the first modern exchange in history. The guilder was the world's reserve currency. You couldn't operate internationally without guilders. Capital poured in from every corner of the known world: Asia, Africa, the Americas, Europe. Money-seeking returns concentrated in Amsterdam. The Dutch Republic was what you'd get if you combined Silicon Valley, Wall Street, and the City of London into 1 square mile. Stage 1. Then came the wars. 3 Anglo-Dutch wars. Wars with France, wars with Spain. Dutch military commitments stretched from Indonesia to Brazil to South Africa. Government debt increased from 4 million guilders in 1650 to 80 million by 1690, a 20-fold increase in 40 years. To fund it, they printed. They expanded the money supply. They ran the printing press. Meanwhile, tulip mania, tulip bulbs selling for more than houses. A single rare bulb could cost 10 times a craftsman's annual income. Asset prices completely detached from any economic reality. Everyone getting rich on paper. The Bank of Amsterdam, supposedly the safest institution in Europe, was secretly lending depositor money to fund government wars. Fractional reserve banking before it had a name. A Ponzi scheme wearing institutional respectability. Stage 2. 1690, the smart money moved. Banking families transferred to London. Sephardic merchants who'd built Amsterdam's wealth began relocating. Portuguese traders opened London offices. German financiers pulled capital systematically over years. Why? The insiders knew the Bank of Amsterdam was broke, had been since 1672. They'd been using new deposits to cover old withdrawals for decades. Classic Ponzi mechanics. The secret held until it couldn't. Stage 3. 1795, French armies invaded. The Dutch Republic fell, the guilder collapsed, the Bank of Amsterdam's fraud exposed, depositors lost everything, riots, chaos. The Dutch Golden Age ended abruptly. 150 years of dominance gone in months. Stage 4. Where did the capital go? London. The cycle continued. 18th through 20th century Britain, the empire on which the sun never set. At peak, Britain controlled 23% of the world's population and a quarter of Earth's landmass. The pound sterling was the global reserve currency for over 200 years, longer than any currency in modern history. The City of London was the center of global finance. Need capital for any project anywhere? London. British banks financed American railroads, African mines, Asian plantations. Infrastructure on every continent. Over 60% of international trade settled in pounds. The gold standard was built around sterling. British financial dominance seemed permanent, eternal. Stage 1. Then the 20th century, 2 world wars. World War I cost Britain the equivalent of 600 billion modern dollars. They borrowed from America, from their citizens, from anyone who would lend. Government debt went from 30% of GDP to 130%. They tried maintaining the gold standard, failed in 1931, tried again briefly, failed in 1933. The system was fracturing. World War II made everything worse. More debt, more printing, more promises they couldn't keep. Britain ended the war, technically victorious, but financially destroyed, broke, dependent on American loans to survive. Stage 2, 1949, the quiet exodus. Major British corporations started moving operations to America. Unilever, Shell, British Petroleum, not abandoning Britain, just shifting investment, redirecting capital, building elsewhere. Wealthy British families transferred assets overseas, to Switzerland, to America, to Canada, to anywhere that wasn't high tax, over-regulated, declining Britain. The brain drain accelerated. Scientists, engineers, entrepreneurs, academics, all leaving for opportunities in America. By 1960, foreign investment in Britain had fallen 62% from pre-war levels. The money was leaving, the talent was leaving, the future was leaving. Stage 3. 1967, the pound devalued 14.3% overnight. One day you wake up and your currency is worth 14% less. The government had no choice. They'd exhausted foreign reserves defending the exchange rate. 1976, Britain went to the IMF for a bailout. The former global superpower had to beg for emergency loans like a developing nation. The humiliation was absolute. The pound lost reserve status. International trade shifted to dollars. Britain's century of dominance ended forever. Stage 4, 3 empires spanning 500 years. Same 4 stages, same outcome. Now, let me show you why America is in stage 3 right now, and why the mathematics say what's coming is unavoidable. 1944, Bretton Woods. America becomes the global reserve currency, the dollar backed by gold at $35 per ounce. Other currencies backed by dollars. The system is born. World War II devastated Europe and Asia. America emerged untouched, productive capacity intact. Capital flooded in. U.S. markets became the deepest and most liquid on earth. Everyone wanted American assets. The Golden Age, 1945 to 1971, 26 years of absolute dominance. Stage 1, August 15th, 1971, Richard Nixon ends gold convertibility. The dollar becomes pure fiat, no gold backing, no commodity backing, just faith in the U.S. government, just trust. And when you remove all limits, spending explodes. 1980, national debt is $900 billion. 1990, $3 trillion. 2000, $5.6 trillion. 2008, $10 trillion. 2020, $27 trillion. January 2025, $36.1 trillion. December 2025, $38.4 trillion. A 4,200% increase in 45 years. But that's only federal government debt. Corporate debt, $13.5 trillion. Household debt, $18 trillion. Student loans, $1.77 trillion. Credit cards, $1.1 trillion. Auto loans, $1.6 trillion. Medical debt, hundreds of billions. Total American debt, over $100 trillion. That's 370% of GDP. Spain collapsed at 200%. The Dutch at 250%. Britain lost reserve status at 130%. America is at 370% and accelerating. The government now pays over $1 trillion per year just on interest. More than defense spending, more than Medicare. $1 trillion just on interest. Not paying down principal, just interest. And how is that funded? Money printing. M2 money supply increased from $15.5 trillion in February 2020 to $21 trillion by April 2022. 40% expansion in 26 months. The largest monetary expansion in American history. Stock market at all-time highs while real wages stagnate. Housing up 73% since 2019. Every asset class simultaneously overvalued. The Federal Reserve balance sheet went from $800 billion in 2008 to $9 trillion in 2022. Stage 2 complete. Now stage 3, the exodus. China held over $1 trillion in U.S. treasuries in 2013. Today, $760 billion. They've sold $300 billion. Japan reduced holdings by $220 billion since 2022. Saudi Arabia selling, Belgium reducing, Switzerland selling, France reducing. Even the Federal Reserve itself is reducing its balance sheet through quantitative tightening. So who's buying U.S. debt now? Mostly the U.S. government itself, the Federal Reserve, government pension funds, circular financing, printing money to buy your own debt. That's not strength, that's desperation. BlackRock, $10 trillion in assets under management, has restructured portfolios, reduced treasury exposure, increased emerging markets, European infrastructure, Asian real estate, gold, Commodities, diversifying away from concentrated dollar exposure. J.P. Morgan restructured. Goldman reduced U.S. equity recommendations. Morgan Stanley increased international allocations. Bridgewater has warned about dollar devaluation for years. The smart money is moving, just like Spain, just like Amsterdam, just like London. Stage 3 verified. Now, let me tell you what Stage 4 looks like based on history and mathematical inevitability. The dollar gradually loses reserve status. Not overnight. Gradually, then suddenly, countries start settling trade in other currencies. Yen, euros, bilateral agreements bypassing dollars entirely. It's already happening. China and Brazil trading in yuan, India and Russia in rupees. BRICS, nations building alternative payment systems. Over 40% of global GDP now in BRICS-aligned countries building infrastructure to trade without dollars. Saudi Arabia, which for 50 years priced oil exclusively in dollars, has recently signaled willingness to accept other currencies. They've explored yuan-denominated transactions. The petrodollar system is fracturing. When dollar demand drops significantly, what happens to all those dollars sitting in foreign central banks? They come home, flooding the U.S. economy. That's when inflation goes vertical. The Fed faces an impossible choice. Raise rates dramatically to crush inflation, which makes $38 trillion in debt completely unpayable and crashes the economy. Or keep printing, which destroys the currency through hyperinflation. Either path leads to the same place. Asset prices crash because liquidity disappears. Stocks, bonds, real estate, everything deflates simultaneously. Banks fail, pension funds go insolvent, insurance companies collapse, the cascade begins. The middle class, holding most wealth in dollars and dollar-denominated assets, gets completely wiped out. Savings evaporate. Retirement accounts vanish. Home equity disappears. This isn't speculation. This is the pattern repeated 3 times across 5 centuries. I know what you're thinking. America is different. Strongest military, most advanced technology, best universities, most innovative companies. Let me tell you what history proves. Spain had the most powerful military in the 1500s. Didn't prevent collapse. The Dutch had the most advanced financial technology. They invented modern capitalism. Didn't prevent collapse. Britain had the largest empire in history. Industrial revolution. Global navy. Didn't prevent collapse. Military power doesn't stop economic mathematics. Technology doesn't prevent currency debasement. Innovation doesn't overcome fiscal insanity. Exceptionalism is just a story empires tell themselves before they fall. The Fed can print infinite money. They'll never let the system collapse. They printed infinite money in Weimar Germany. Hyperinflation destroyed the middle class. Savings became worthless. They printed in Zimbabwe $100 trillion notes, worthless paper. They printed in Venezuela 1,000,000% inflation. People eating zoo animals. They printed in Argentina multiple currency resets, decades of poverty. Printing money doesn't create wealth. It transfers it from savers to debtors, from workers to asset holders, from middle class to financial elite, until confidence breaks. Then it accelerates the collapse. Every empire thinks it's different. Every reserve currency believes it's permanent. They're always wrong. The pattern doesn't care about narratives. It doesn't wait for permission. It just unfolds, like mathematics, like gravity. And right now, every indicator is screaming stage 3. So what does this mean for you practically? If most of your wealth is in dollar-denominated assets, you're exposed. Not might be. Our diversification isn't optional anymore. Consider assets that hold value during currency debasement. Gold has held value for 5,000 years across every civilization. Silver, commodities, real assets that can't be printed by central banks, geographic diversification. If major institutions are moving capital internationally, consider following. Research stable foreign currencies, Swiss francs, Singapore dollars, Norwegian kroner. Spread political risk across jurisdictions. Understand the timeline. Stage 3 doesn't last forever, historically 18 to 36 months. We're probably 12 to 15 months in based on when foreign selling accelerated. That means you have time, not years, months. Use it wisely, increase liquidity. Keep accessible cash. In a crisis, liquidity gives you options. To buy crashed assets, to move quickly when opportunities appear. Illiquid assets trap you exactly when you need mobility. Reduce debt. High debt in a rising rate environment is financial suicide. If you're leveraged, deleverage now. Every point rates rise makes debt more expensive to service, and rates are structurally going higher. Invest in skills and relationships. The one asset that survives every collapse is human capital, skills that create value, knowledge that solves problems, relationships built on trust. These can't be inflated away or confiscated. Stay informed. The people who survive these transitions see them coming, who understand the pattern, who don't wait for mainstream media to confirm what's obvious from the data. The information is available, the pattern is clear, the data is verifiable. What you do with it is your choice. This isn't fear-mongering, this is pattern recognition. 500 years of economic history showing the same cycle repeatedly. America's debt hit $38 trillion for a reason. Foreign central banks are selling for a reason. Major institutions are diversifying for a reason. They see the pattern. The same pattern that destroyed Spain, that destroyed the Dutch Republic, that destroyed Britain. We're in stage 3, the capital flight phase, the silent exodus. The smart money is leaving. The warning signs are everywhere if you know what to look for. Stage 4 is coming. The mathematics are inevitable. The only question is whether you'll be positioned correctly when it hits, or whether you'll be asking how you didn't see it coming when all the signs were right there. The pattern doesn't care if you believe in it. It doesn't need your faith. It doesn't require your acceptance. It just unfolds, like every time before. The people who survive these transitions aren't always the ones with the most money. They're the ones with the best information and the courage to act on it. Now you have the information. What you do next determines everything.